All right, y'all, back to work. Another fantastic day comes to an end. Those range rotations this week, back-to-back range rotations. Hope you guys made a bunch of money on that today as well. Now, more importantly, we have non-farm payrolls tomorrow morning, the biggest news of the week. I'm definitely expecting some shenanigans around that jobs report tomorrow. I'll talk about why I say that in more detail in tonight's video. Also, we have this huge move, this blast, big move going higher here this afternoon. Anytime we see a big move like this, the day before a major news event, there's always two types of trades I look for the following day. They're both very easy trades. They can both make us a lot of money. But the second trade, we'll talk about tonight, the second trade oftentimes can make double the amount of profit. So I'm going to cover that in detail tonight as well. This will be a great video tonight. I'll give you guys all the entries, the exits, my roadmap for tomorrow. I'm excited just talking about it. So charts are ready. Enough of the intro, right? Let's roll those sleeves up. Non-Farm Friday coming at us tomorrow morning. It's been a hell of a week so far. Let's finish up strong on Friday morning. S&P SPY ready to go tonight. Nasdaq triple Qs are ready. I've got 4 clues on these charts telling me where I think the money is made tomorrow. The first clue is right here on the hourly time frame. We've been talking about this all week. They call it Red September, but I said it all week this week. I definitely was not ready yet to call this a bear market, and obviously it's definitely not a bear market right now. We're almost back to all-time highs here on the S&P and SPY. Clue number 1, I like to use the higher time frame, the hourly chart, for the directional filter, and it's very easy to see right now the buyers are in full control of momentum. Clue number 2 is down the calendar for tomorrow. Tomorrow's not your average Friday. It's non-farm Friday, the biggest news of the week. Now, 2 things I want you to keep in mind for tomorrow. We need what's called the Goldilocks zone tomorrow. Not too good, not too bad, right in line with expectations. We do not want that number to be red hot. We don't want to see 150K tomorrow because that might spook J-Powell to cut rates later on this month. We also don't want that number really, really low, right? We don't want to see a 10,000, 20,000, 30,000 tomorrow because that might spook investors, spook the buyers, and cause a major market tumble. We want that Goldilocks zone tomorrow. That's one thing on my mind for tomorrow. The second thing, though, I mentioned earlier, I'm expecting some shenanigans around the report tomorrow morning. In the markets, there's an old saying called buy the rumor, sell the news. We saw the ADP number this morning at 8:15 Eastern time, a very low number. And it seems like the rumor now is that tomorrow's number will be a very low number, and of course encourage J-Powell to maybe give us a 50 basis points during the FOMC announcement a few weeks from now, right? So remember, buy the rumor, sell the news. This big run higher we saw this afternoon might be the buying of the rumor right now, but don't be surprised tomorrow if we see what appears to be a good number but triggers a massive sell-off. We'll plan for that tonight. Buy the rumor, sell the news. Keep it in mind for tomorrow, right? Goldilocks zone for tomorrow. Not too good, not too bad, right? Somewhere right in the middle. That's second clue for tomorrow. The third and fourth clues are over on the tick charts. We don't trade time charts in our trade room. Tick charts make entry timing a whole lot easier. And by the way, if you're watching for the first time right now, that is a 7,000 tick chart, upper left-hand corner. And that moving average right there is the only indicator we need. It is the 21 EMA. I see 2 clues right now on these tick charts. Help us wrap this all together. First clue is a range breakout. Got a range right there. Got a range right there. You probably know this by now, right? Anytime we see a range breakout, we always expect a breakout pullback. So breakout pullback zone, 87.75, breakout pullback zone, 74.75. That's one big clue here on these tick charts. And what is probably the most important clue is anytime I see a big move like this, I mentioned this earlier, before a major news event, there's always 2 types of trades we look for the following day. And as I mentioned earlier, the first one is very simple, can be very lucrative. I'm going to cover the second one, though, on the Nasdaq a bit later because the second one has potential to be a much bigger profit. So you'll want to stick around. If you like making money, I would definitely make sure you watch this video all the way to the end. Let's talk about the first of two game plans, first of two trades for tomorrow, and that is a two-legged pullback. Imagine a measured move. It goes a little bit too far. That's a two-legged pullback. Now, a two-legged pullback will allow us to buy nice and low. But remember, I don't have a crystal ball. I don't know how far that pullback will go. It might be this breakout pullback zone, could be this breakout pullback zone. It could be all the way down at that previous range from 2 days ago. What I do know though is once I get that two-legged pullback, a bit more than a measured move, this will be a great spot for a bear trap. It will feel very bearish right now, but again, anytime we see a big move like this, this is just a pullback to attract in more buyers at a lower price. My favorite entry on these is a bear trap. So let the price pull back. Let the bears try twice. Let them try once. Let them try twice. Once I see bears are committed, now I know where their stops are. Now I know where their pain is. If you're caught short, you get stopped out of a short trade, you buy your way out, and that creates that short squeeze. Now, in these two-legged pullback scenarios, the goal, the target is to go back up and retest that high. Now, watch closely. If I can get this thing starting to squeeze going higher here, this is we look for an add-on. Add-ons are very important for growing your account quickly. Add to your winners. To do that, shallow pullback, higher high in price. I want to get right below that low in our trade room. We call these bear traps and add-ons and back up to retest those highs. Now, what if we don't get that bear trap down there? We see this all the time in our trade room. We'll get that nice deep two-legged pullback, but there's so many buyers that want to buy the dip. We don't get the bear trap. It just whoop and runs right back up again. These can be a bit frustrating because you don't get the entry you want. Here's what happens is it'll pop up and begin to grind going higher. Now watch closely. There's two things I'm going to do if I don't get that bear trap down there. First things first, find a trend line. Off the high, bring that trend line down and make a channel. Most important, second step here, look for prior swings, and I want to buy underneath that prior swing. We call this the first test is the best test in our trade room. Any of the entry patterns you guys are learning in my free trading classes can be applied the low of that channel. So a variation of a two-legged pullback is a V bottom. First test is the best test off of that channel. And remember, like we saw last week, buy the rumor, sell the news. Do not be surprised if we see a very strong run going lower. We see a beautiful bear trap down here. It pops up, but every once in a while what happens is we hold above that high and we see another leg running lower. Now we call these retest trades in our trade room, and they are one of my favorites. The bottom line is anybody who sells up here, they're taking their profit where? Down here, right? Sellers up here become buyers down here. Now you tell me, we're bullish overall on the hourly time frame. Is this a good place to sell short? No, right? Please say no. You're selling low in an overall bull market. So if that's the case, then this is a great spot for a bear trap. Same basic idea. Don't pick the bottom on this. Let it pull back. Bears once, bears twice. Trap those bears in. Squeeze those stops. And again, if you learn one thing from these videos, when you find yourself running towards your targets, add to your position. What I do is I take a half off first target and then put it right back on again, adding to our winner. I'll tell you right now, I would not complain at all about a retest trade. It runs down, it's a bear trap, we take our one-to-one target, stop moves up to point of entry, we don't run back up to retest the high, it retests that low, do it again. Bear trap, add on, back up to retest that high. Okay, that's the first of 2 trades for tomorrow. I want to cover that second trade on the Nasdaq. Before we do that though, let's slow down for 2 seconds because I know a lot of you folks watching right now, you guys know these patterns, you're making money with these already. But if you're tuning in and watching for the first time right now, this might be a brand new strategy for you. Don't you worry though, I teach all of these entry tactics in a lot more detail in my free trading course. In fact, I have a ton of examples of bear traps, add-ons, retest trades. Guys, the markets are way too good right now not to be making consistent profits. So I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there. Take that free trading course because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that literally tells me exactly where to find the winning trades this day. It is so simple. You'll laugh at how simple that technique is. Also, more importantly, let's face it, we make our money by timing good entries. So in that video course, I'm going to teach you my 4 favorite entry setups so you can time better entries, get your confidence back in your entries once again. Guys, if you're still missing the best entries each day, if you've lost your confidence in your current indicators, your current strategy, don't wait any longer. Hit that link that popped up there. Everyone loves all the trade examples I include in that short video series. The best part is it's completely free for you. Also be aware too, guys, I'm going to put a bunch of important links you'll need below the video in the description of the YouTube video. I'll put the free class links down there. Start there first. Most folks start making money all on their own, all from that free video class. That link is below the description. And also be aware too, we trade together. We do this together every morning, 8 o'clock Eastern time. I'll put trade room links down before you there, description of the video. And if you're on Twitter or X as they call it these days, I post a ton of videos and charts and mindset stuff on the X platform. If you're on there, give me a follow. Again, all my details you'll need to follow along in between these videos, learn a lot more, hopefully earn a lot more. I'll put everything below the video tonight description of the YouTube video. All right, so now you know where to go to get more details and see more examples of these entry patterns that I'm drawing here for tonight. Where we leave off here, okay, I have another strategy I want to talk about a bit later on tonight on the Nasdaq. Before I do that though, let's talk about a couple variations of this. So for example, we may not get that deep 2-legged pullback, right? That's one of 2 strategies. What if we don't get that deep 2-legged pullback? For example, what if all we get is a 1-legged pullback? Right? What happens then? Well, remember, we're way high up right now. We're way high up. And remember, buy the rumor, sell the news. So a 1-legged pullback, we gotta be a bit suspicious, right? Because a 1-legged pullback, what's gonna happen is the bears will come in and try to whack that lower and complete that second leg going lower. Okay, if all we get is a 1-legged pullback, and it may not be right, it might be anywhere. I don't care where it is. We may keep going higher overnight here, right? So the bottom line is a 1-legged pullback is suspicious after a big move higher. So there's a pattern I teach in the free video course called a technical bear trap. It's very simple. Bears try once, higher high, bears try twice. Now look at this pattern closely, very important. It's a higher high in price and right below that low. It's a little bit different than the pattern we use. 1 2-legged pullback, bears once, bears twice. That one's a higher high in price. But now remember, on a deep pullback, I can risk small to earn large, right? That I can be a lot more aggressive on that trade. On a relatively shallow pullback, I do not want to buy up there because now my risk reward ratio is dog crap, right? You can't make a living trading big risk, small reward like that. Maybe every once in a while you get lucky, but it's tough to get lucky every day, right? Okay, so we're not gonna trade it the same way. If it's shallow pullback, 1-legged pullback, I want to be in. And again, you'll learn the entry tactics in this one in the video course. I want to be in underneath that low. That way my risk and my reward ratio, see that? That's a low risk, high reward trade other professionals will take that, the self-fulfilling prophecy, you'll benefit from that. Very small adjustment, but I'll tell you right now, that trick right there will help you avoid so many losses. It took me almost a decade to learn what I just talked to you in a few seconds here. Okay, that's one variation for tomorrow. And another one here, all right? Remember, buy the rumor, sell the news. I would not be surprised tomorrow if we saw a nice Goldilocks zone number tomorrow and this thing starts to run and grind going lower. All right. I want to make it very clear here. There's a very big difference between a two-legged pullback, right, and a slow grinder. A slow grinder. Now, if you're within the trade room, you know this already. Slow grinder. Now, what happens in a slow grinder is it drags down all of the moving averages, right? These are tricky and they're very common around major news event. Now, the most important thing I want you to understand about this is a slow grinder almost always will pull back, retest that low, and then make that run going higher. Okay, remember this. A slow grinder that grinds down below that moving average, it will almost always pull up above prior swings, retest that low, and then blast higher. So obviously a retest trade is the easy one. The challenge though is that as it starts to grind going lower here tomorrow, I have to anticipate that up, retest, and go from there. So remember that shallow pullback and that technical bear trap I mentioned earlier? That technical bear trap is a very protective entry, right? It's a protective entry. I'm getting in as low as I possibly can to get that risk reward ratio as good as I can get it, right? That pattern is the same pattern I'm going to use if we run lower and grind down. All right. And you'll know it, right? That grinding lower, you'll feel it very slow. It'll grind going lower here, right? Okay. So in that situation, it goes up, retests, and back up. So knowing that, in order for me now to get in on that move, I'm going to use one of those technical bear traps. Now, why? Because on these trades, I will look for a quick first profit target. Because again, there's a good chance here we'll get above one of these prior swings and run back down again, right? I want to be in the green on that trade. I want to be getting that stop up to my point of entry. I want to remove the risk, hopefully lock up a quick reward. On these trades though, I am very quick to get rid of that risk, right? Stop moves up quickly, one-to-one target. That way, if it does run back over and retest that low, I'm protected. Now, maybe I'm wrong, right? Maybe it keeps going, right? Sometimes they do. About 20% of the time, these will go right back up to retest the high. But again, that means 80% of the time, 8 out of 10 of these are going to pop up, like I said earlier. They're going to pop up, get above one of these highs here. They're going to run right back down again. Now, again, remember, the tick charts are for entries. They're not for direction. So don't let that next leg lower. Do not let that next leg lower fool you. It's not a reversal. It's a huge run higher right now. All they're doing is they're trying to get a bit lower to get more buyers in to buy it right back up again. So think about this variation. I know it's a bit more advanced. I try to keep this thing simple here on these videos. But again, tomorrow's Non-Farm Friday. Buy the rumor, sell the news. There's probably going to be some shenanigans going on around this. So again, if it grinds down on this, a technical trap, I will look to get rid of that risk as quickly as I possibly can. Nice tight stop, tighten up, quick target, and hopefully keeps going back to retest the high. If it doesn't though, do not miss that retest trade, okay? Do not miss that retest trade. Again, retest trades, as you guys see in the trade room, are oftentimes our biggest winners of the week. Okay, so that is the first strategy and some variations I'm watching for tomorrow because let's face it, I don't have a crystal ball. So I want to go over some game plans. We plan our trades. That way, once we know we get tomorrow, we get a game plan for it. Let's talk Nasdaq right now. I've been leading you guys along here on that second strategy for tomorrow over on the Nasdaq. And on Tuesday, we said, okay, red September, right? And we said earlier this week, we said, you know what? Technically right now, there was no reason to think about this being a bear market right now. And a great example this week of how forget all the news media, forget all the stuff online, just simply trade the chart. The chart told us to keep on buying this week, and that's pretty much what's happened the entire week here. So well done on that. Red September. Now it's early September. We might still be a red September, but we're definitely not there just yet. Now, if you're enjoying tonight's video, please help me grow this channel by hitting that like button. Make sure you subscribe. I know we're all busy people these days. I appreciate you all tuning in and watching my videos. So as always, thank you guys so much for the likes, the subs, all the ongoing support, all the love I get in the comment section. Now, not wasting time here, let's dive in and go grab our tick charts right now. Notice too here a 4,000 tick chart on the Nasdaq. And what do you see right now? Well, first of all, I see a big range right there. And we see a massive breakout. So breakout pullback zone is definitely on my radar for tomorrow. And again, this huge move that we saw today, and I told you guys last night, watch that 10 o'clock hour. We had ISM services this morning, 10 o'clock Eastern time. It's almost always a good time to be trading. So on the S&P chart, we talked about how I wanted that two-legged pullback. We talked about entry tactics off it. We talked about the retest trade. We talked about the V bottom trade. We mentioned the shallow pullback, the technical trap, right? The grinding down. I know I covered a lot there on the S&P. All of that can be applied here now on this Nasdaq chart as well. The second strategy tomorrow, which is oftentimes twice as profitable as a two-legged pullback, is a range up here, right? Anytime we see a big move, we know the moving averages now have to kind of catch up to what's going on. That oftentimes leads to a range up here. Now, by this point in the week, if you've watched my videos this week, you know why we love ranges, right? Because what happened today? There was that range we saw today. We talked about this game plan last night, right? The amount above the range, the amount below the range, get that bear trap and back up again. That range right there, beautiful again. Above the high, below the low, right? Bear trap and back up again. By now, you should know why we love range-bound markets. So the most important thing about a range is that ranges like to rotate, right? And again, they're very common after a big move higher. Ranges are going to want to rotate back and forth, up and down. And we're going to use techniques like expanding triangles, which you learn in the free video course. We use techniques like the amount above, the amount below for symmetry, like we saw today, the amount above, the amount below, like we saw yesterday as well. Okay, so ranges like to rotate. So the reason why I said earlier that these are oftentimes a lot more lucrative than a two-legged pullback is because now think about this, right? There's that breakout pullback zone down below us. I would love to get a break below that range, get somewhere down in these key areas of support. And remember, when this thing pulls back like this, it's going to feel very bearish. That voice in your head will be scared to take this trade. But remember, we're so bullish right now on the higher time frame. A deep pullback right now will not be enough to reverse this into a bear trend overall. All we do now is rather than try to pick the bottom on this, that's the best part, right? We don't need to pick the bottom on this. We don't need to blindly buy that. All we do is wait for the price to pull back, get those bears coming a couple times here, and trap those bears in and run where? And run where? Back to the high? Yeah, for sure. But more importantly, the pendulum swing. This is why ranges are so, well, this is why I said earlier, they oftentimes are twice as lucrative, right? Because on a two-legged pullback, we go back to retest the high. On a range play though, yeah, now we know where that rotation is on the opposite side. And remember, if there's one scenario where you need to get adding to your winners, it's always a range rotation. It's always a range rotation. We go up, shallow pullback, higher high in price. Want to add on right there, right? Add on right there. Look over here, right? There's your bear trap. There's your add-on, right? There's your bear trap and your add-on. Run lower, bears once, bears twice, bear trap, go up, higher high in price, below that low, bear trap, and the add-on. And again, I realize I'm simply drawing the screen right now. A lot of examples of these though inside that free video course. Bear trap, add-on, back up to retest that high. And like we saw the last couple days, remember that knife cuts both ways. So we oftentimes will see a range up here, and after a big move higher like this, we really have to be careful chasing after it going higher. It will be very tempting to chase this thing running higher, but we know better than that, right? Not after a big move like we saw today. Let it correct, let it rotate back off that high. And again, the amount above, the amount below, that will give us our key area of support. And like I always say in these videos, this will feel very bearish. But remember, this is a tick chart, right? The tick charts are for entries. All I do is use the hourly time frame for direction, and I simply look for the entries on the tick charts here, right? It is difficult though. It is difficult if you're not mentally prepared. It'd be very difficult to think this is not a bear market, right? It's not a bear market. It's a range rotation, right? Gotta get that into our heads here. So same idea, right? Once we complete that pendulum swing, and if we're lucky, like we saw today, there'll be a triangle here somewhere too. You'll learn that technique in the video class. I mentioned earlier, same idea, right? Bears once, bears twice, trap those bears in and rotate that sucker back and forth here. Buy low, take your profit with that pendulum swing, back other side there, leave that runner, add to your winners as it rotates. And remember, all the different techniques we mentioned earlier on the S&P chart. For example, it's a range mark, let's say tomorrow. If we do see, for example, a big, strong run down like that, and it just whoop and runs right back up again, if it V bottoms off of that low, it's that same technique, right? Same technique. Off the highs, off that low. These are some of my favorites in our trade room. Find that channel, get that first test below that swing, and again, big move down, big move up, leave that runner. Or oftentimes what happens is too, in a range market like this, we do oftentimes see retest trades. Retest trades are very common in a range breakout. You know, for example, we might get that breakout going lower. We oftentimes get that bear trap down there. We'll get a winning trade out of it. We'll get our 1-to-1 stop moves up on it. But hey, ranges, they love to break out pullbacks. So every once in a while, they'll hold the underbelly of that range, go for another leg going lower. Now remember, whenever we see a range breakout, the size of the breakout leg is a measuring leg, right? It's always a measuring leg. So once we know how high it goes up here now, then we can go out and use the size of the breakout leg, combine that right here. That gives me now a measured move, all right? We call this the money zone. The money zone is between that low and that measured move level, right? So breakout leg, measuring leg, that's our money zone. Again, this will feel like a reversal, but it's not a reversal. It takes a lot more than that leg lower to be a reversal. Same thing again, right? Same again. Trap the bears in once, twice, squeeze those stops, and back up into that range here. Add to your winner with that separation. I'll tell you, love those retest trades. So that is the second strategy for tomorrow. Trade that rotation with bear traps, add-ons, and don't be afraid to take that retest trade. I'll watch for that tomorrow morning in our trade room. Now, speaking of tomorrow morning in the trade room, 8 o'clock Eastern time, guys, the easiest way, start making money in these markets. Come out and learn and trade along every morning at the opening bell. I'll put all the important links you need. Grab that free video class first. You're going to love all those trade examples. Then come join me in the morning room and we'll do it all together. In the meantime, guys, great week. Make some money for me tomorrow morning. Follow those rules tomorrow morning. In the meantime, be well. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.